Get to our next corporate conversation, and the company on our radar is actually Thermax. Now, Thermax has entered into a strategic collaboration with Cirrus Power for manufacturing of electrolysers. To discuss all the details around this development, the opportunity, the outlook, we have with us Ashish Bhandari, MD and CEO of Thermax. Mr. Bhandari, good morning. Great to have you with us on the show. So let's start with all the bare basics. This is a big alignment that's happened. So how does it work? What's the tech transfer, the royalty, the revenue share, and the opportunity itself? Just break it down. Where will it place Thermax in the entire electrolyzer ecosystem?
Okay, I'll answer it in three parts. First is the choice of technology itself. Thermax has chosen to go with solid oxide as the core technology around which we would do our development. And we have preferred it over a couple of the competing technologies like alkaline and PEM, because we think for India's industries where decarbonization through hydrogen will happen first, which is fertilizer, steel, refining and petrochemical. In these industries, the application for SOEC as a technology is very high. And that is because there is a high heat requirement for this technology, which has the capability to deliver much higher efficiency than other technologies. So that is the choice that Thermax has made. It aligns very well with our strengths. And because we are at the core a company that understands heat management very, very well. So that is the idea. Second, it's a licensing arrangement where some of the core technology elements will be provided to us by Cirrus Power. It's a non-exclusive global license. So I'll talk about both the words. It's non-exclusive, which means the license that is given to Thermax can be given to others. And we are comfortable with that. We think we can develop products that are competitive and can stand on their own. More importantly, in our mind, it's a global license, which means it's not limited to India. We can take our products that we develop and we can sell it anywhere, everywhere. Third, in terms of the terms, what we are comfortable sharing is of course, there's a fee to the license and everything else. There's a very direct and a very specific technology agreement, which means Thermax will obtain technology with very specific agreed upon technology capabilities around which we will develop all our products and everything else. There is a royalty. The royalty terms are reasonable in our account, not shareable at this current moment. What we will result in is a prototype development over the next 1 year, followed by manufacturing plant, and then after that, much bigger, wider scale deployment.
Right. The street likes what you're saying. It's, in terms of the opportunity, the terms of the deal that you have, and the business plan that you have. If you could give us some more details on this, if you could give us a sense of what the total addressable market is, when do you start bidding for electrolyzers, and what could this be in terms of potential revenue and margins for a company like you going forward?
Look, I'll share what we know. Yeah, and there is a lot in this space that we don't know. What we don't know is how the space will evolve, because there are a lot of policy-related discussions. Also, in terms of choice of technology, we have made our choice of technology, but we know there are other competing technologies, and especially there is the load of players out of China where the price points are just very difficult to determine what they are today and what they will be in the future. So there are some geopolitical ramifications as well. And third is adoption. Yeah, so of hydrogen overall, not just about SOEC, about hydrogen overall. So there are a lot of moving parts, but not doing anything is clearly not an option either. Yeah, so which is why we have chosen our path. So with that said, broadly, what I think, and we'll have to take a longer look. If we look at 2030, I suspect the market for electrolyzers in India will be a few $1 billion. Yeah, and in that, how big will SOEC be? What Thermax's share would be remains to be seen. Even profitability will be driven by competitiveness, but I hope at least 10 to 20% market share should not be should not be something we cannot aspire for. Yeah,
Okay,
but there are a lot of moving
Ashish.
parts.
Okay, no, absolutely, and I think you described it so well. Congratulations on this sort of new segment. Thank you for joining us, Ashish. If I can ask you to, so you said billions of dollars, roughly. Was that? Is it?
So it could
more
be
specific?
anywhere.
Yeah.
I think my personal number of what the size of the market would be somewhere between $2 to $5 billion. Yeah, that
Okay,
is
so
very wide range, you would say. And I would say there are just too many open questions right now, even to come up with any number. I think the focus should be on what we can work on and deliver.
yeah, so
and if we do that right, the
just to narrow the focus, the mind a little bit more. I know this is all projections, and I think our viewers understand that as well. And you made it amply clear there are lots of variables and moving parts. So if it's, say, for example, $3 billion, right, by 2030, you're saying you should be able to get a 20% share of the market, right? That's about $600 million.
Yeah, I don't think that's. Go ahead. Sorry, please.
And what kind of rough margins, again, all projections?
All projections, yeah, absolutely. Very little idea on what it would mean.
Okay.
I think, look, you start with fundamentals of what the world of the future needs, and you're very clear hydrogen is going to be a big part.
Ashish, if I can ask, got it. Let me just ask you two more questions. Does anyone make electrolyzers here in India right now? That is one.
Right now,
I think, is it all imported?
Right now, predominantly imported, in a segment which is very, very small. As you know, as part of PLIs, there are a few companies who have committed to making electrolyzers in India over the next 3 years. Not one of them is based on SOEC technology.
So, since we don't have immediate numbers to work with in the here and now, Mr. Bhandari, I want to go back to just understanding this. Like you said, the opportunity size could be $3 to $5 billion. That's the green hydrogen opportunity in India, right, that we're talking about up until 2030. What gives you the confidence that this particular technology that you have opted for, SOEC, that this will win more of the market share? And just give us some time to market that you have in mind. By when will the technology transfer happen? When will your plants come up? And by when do you actually hit the ground?
Okay, let me take both of those questions separately. First, in terms of why we think this is the technology to work with, I'll repeat, it is very well suited for the kinds of industries that India looks to decarbonize. Yeah? And I shared my steel, fertilizers, refining, and petrochemicals. Those are the four primary industries. And the reason for that is the SOEC delivers much higher efficiency, but trades that off with higher capex requirement, and especially a requirement for heat. And in these bigger process applications, heat is available. And Thermax is very well versed in how do you optimize heat in a process and in an equipment. So that is where our capability comes in. We think it's a very good fit for what India needs and what Thermax can do well. Yeah, that is the primary driver.
Yeah, and by when? Yeah, and by when will your plans be up and running? Yeah.
Look, in terms of, the technology transfer is immediate. Yeah, we are getting started running on the ground immediately. When would products be available for? I wouldn't say we would have to wait 2 years for the first products to become available, and 3 years for a full-scale plant to be available.
Right. And finally, before we let you go, since we have you with us, if you could give us a sense on the non-electrolyzer, the current part of your business, how execution has been in the second quarter so far, order inflows, margins were a little under pressure. Have you seen some bottoming out there? How does the next couple of quarters look for you?
Look, I continue to stay optimistic. I don't think it's, I think maybe 2 years ago, right after COVID, there was a period where orders were just coming in. We are not in that phase anymore. There's a lot of opportunity, but you have to fight for it, and you have to be doing new things, which is what we think we are, even beyond hydrogen in almost every part of the business. So overall, optimistic, and that Q1 was on the margin side. We took some hits, and hopefully that's the end of it, given we are just 10 days to or very close to finishing the the quarter overall. Too early to start predicting and not right to predict, but overall optimistic about what the future holds.
All right. Ashish, we'll leave it there. Good conversation. Thank you very much, and good luck as you sort of build that side of the business out over the next couple of years or so. And of course, we'll speak after you have you report the numbers for the quarter. As you said, we're very close to finishing it. Well, let's focus on the next one. Nazara Technology.